Sunil Subramaniam, who's joining us on the show right now to talk about the market and more. A very good afternoon to you, Sunil. And we are almost towards the end of the year 2024. A lot of new themes have emerged, at least towards the fag end of this year. You have CDMO, which is finding new favor in the market. You also have the solar, the renewable energy theme also as one of the bright spots. What do you think in the year 2025? Do you think these new themes that have just found favor will continue with the same fervor?
To some extent, I think digital and those spaces are also something which India's artificial intelligence is playing a role there. So I think IT will have some element of new elements there. But if you look at the fact on 2025 is going to be dominated by Trumponomics, right? So what Mr. Trump is going to do, and there I see a big opportunity for in the PLI space for us to be partnering with China, because if China is going to be slapped with heavy tariffs and India not so much, right? 60% versus 10%. So I expect that with the thawing of relationship on the political side, we could see kind of partnerships between China and India at a ground level, so that products are then sent to America made in India, but with Chinese participation in the value chain. So I think that's a new twist to the China plus one. So China plus one, you may call it. I think that will be probably a good story which will start playing out. I think it will play out in electronics, it will play out in pharmaceuticals, it will play out in some extent in textiles because of the Bangladesh issue. So I think you're going to see definitely some new twinges to the existing things like PLI coming up in the next year. The budget is also going to be a trigger to set direction. But on a solar part, probably on the looking at the oil scenario, right, with the China economy being weak and Europe being weak, though US is showing recovery, oil, if it's going to be trending down, then maybe alternative energies doesn't get that much of a push, right? Because if you get cheaper oil, then everybody tends to put alternatives slightly in the back foot. It's definitely a good long-term play, no undoubtedly about it. But in the short term, it's the oil which will decide whether the alternatives, the solar and everything else, gets a pickup.
Yeah, it comes down to oil yet again. But since we're talking about the digital themes and the new themes which we have seen coming up this year, of course, quick commerce was one of them. But clearly getting very heated with that as well, Sunil, and I'm not just talking about this dark store edition, but the fact that even now food delivery, there are new entrants coming in, whether it's Magic Pin, whether it's Ola Dash and all of that, and this would again mean profitability will be kicked down the road.
Yes, but in the new age, profitability is not so much as market share and expanding the market and gaining, like they used to say, eyeballs, right? Getting footfalls onto that, right? In a digital footfalls, if I say. So I think that it's going to be a bloodbath in terms of the economic activity there, but the stock market will still try and bet on the winner, because it's going to be kind of winner takes all, and the losers will either get merged or acquired by one of these biggies. So while it's going to be interesting, it's definitely the way of the future, because the Indian demographic changing towards the younger demographic means buying patterns are changing, and these are the companies which are taking advantage of that. So overall, as a space, I think it's going to be a great space. Who's going to be the winner is the million-dollar question. So if you're taking exposure to that space, best to diversify within 2-3 companies within that space, right? So I think that's the best. But definitely they are the game of the future, and you can't afford to ignore them. And profitability is not the main criteria on which the share price moves in these kind of new age entities, if I may say.
Nilesh, let me come to you. And there's one stock that I want to ask you about is PTM. How are the charts for this one looking like right now? Because if I had to ask this question to you, I think 3 months ago, I'm sure you would have still been unsure about which direction is this stock headed to. But now it has surpassed the 1,000 rupees per share mark. Do you think that there is more scope for an upside for this one?
So technically, it's been a slow and steady up move all through after bottoming out. And it was not a move wherein we saw 10% move ticks and then continues on. Every move, we saw it being faded by some margin. So if you look at the move right away, all the periods, so even now we've had a 3-4 day up move. We could get a fade off, and 1,000 was the last price point back in 2023, which was a resistance. And the next one comes to at 1250, 1300, because that is where the price stabilized post IPO roughly for a couple of sessions. So for now, the trend is positive. A trailing stop loss now comes to around 970 odd levels.
Okay, so that's the take coming in as far as PTM is concerned and the trailing loss that one should watch out for on that one. Just taking stock of what's happening in the market, Craftsman Automation has managed to see a bit of an up move. Bharti Hexacom is doing quite well. Policy Bazaar is in the green right now. In fact, a couple of these insurance companies like GIC and NIA and even Star Health, as a matter of fact, were doing well in the trading session. In fact, talking about Star Health, my colleague Anurag Shah managed to catch up with the management earlier. Hear out a slice of that conversation.
We are growing at around 18% year on year, and this year for the first half, the growth rate has been 17.5%. Last year we grew at 18%. So we believe that, for us to achieve our, vision of doubling the premium to 30,000 crores by FY28, we need to keep growing at 18%, which we are very confident of doing. I think we should ignore this accounting changes in terms of, our reporting and our aspirations are more on the overall growth, the number of policies, the business volumes and all of that. So I think an 18,000 crore number that we have planned to achieve this year, we are quite confident of getting there.
Yes. Okay. And sir, what would be your share in retail and group business, and have you set any target for retail and group business also when you will achieve that 30,000 crore of premium?
I think the business mix today, Anurag, is around 92% retail and 8% group. And we are largely a retail B2C company, and our strategies and our future plans are also more on the retail side of things. So I think that focus will continue to remain. When we get into FY28 and when we get to 30,000 crores, probably the mix may change slightly. It may become maybe an 85 or 15, but bulk of the business will continue to be retail business.
All right, let's move on then. Sunil, what's your take on some of these insurance plays, and which side are you betting on more? Is it the life insurance space or is the general insurance space?
Because I think what COVID has done there is make a big awareness of the health-related risks, and hospitalization costs have gone through the roof. So I think it now pretty much everybody is brought to earth to say that if you're going to hospital, you need insurance. And whereas life insurance is still, penetration, it's like, it's been historically, if you know, sold on tax benefits, sold on assured returns and all of those. The awareness of life insurance is increasing, no doubt, but I would say that health is probably number one out there in terms of that space. So within general insurance, for me, health insurance is the top kind of a thing. And the second is because the per capita income rising. See, from some COVID time to now, from 2,200 to about 2,800, the incremental disposable income is people are now willing to spend on these kind of, health and those kind of things. So no longer, there is a K-shaped development there. That's why your consumption also you're seeing K-shaped recovery. But even within these kind of products, the wealthier of the HNIs and all of that are definitely going to make sure they secure themselves in terms of health and that. And so life will also grow, but I would say that health is probably my number one pick there.
Okay, health insurance is something that you're watching out for. But Naresh, wanted a better sense from you regarding some of these sectors which haven't really caught too much attention. That's textile as well as chemicals. Finally, are there any names worth betting?
So in textiles, a lot of names have already moved up quite a bit. So if you look at any garmenting name, we've seen KPR Mills do well. We've seen Gokaldas Exports move up 20-25%. And other smaller names like Kitex has also done well. So the only name which is left in this basket, which looks interesting, is SP Apparels. The stock is closer to this 950, 980 resistance. If it crosses 980, that would be a good breakout. Similar sector name, SP Apparels looks interesting. And apart from that, there are more on the smaller spinning names which have given good breakouts. Vardhaman Textiles, Nitin Spinners. They would be good on good buy on dips.
Kunal, we are heading towards the year end, and I'm sure you must have already made your list of stocks that are likely the next multi-baggers when you look at it next year. Have you already made that list or no?
I'm still in the process of making it.
So if you're still in the process, which means you've already jotted down some names, isn't it?
So yeah, some of them I definitely have. So for example, one of the offbeat names which I was tracking was Hiranba, a stock which I think is at 400 rupees.
Okay.
That's something which is looking very attractive on the long-term charts, and especially with the fact that the stock has gone through a sharp correction. I also believe that many of the defense stocks, or the traditional defense names, I think these stocks should make a very strong comeback, and especially if one is looking at the likes of HL and BEL and the other names like GRSE, Cochin Shipyard. So from a longer term play, I think that 50%, 40% correction for these stocks which played out in the second half of 2024. I think that correction generally indicates that a major mean reversion has happened, and the excesses which were created at the start of 2024 for many of these sectors and spaces, I think that now is behind us, and so now the risk reward is attractive for these stocks. It's a matter of news flows, which starts to get positive into these names. That's where the price action would start to get a lot more synchronized for these defense stocks. So that's another pocket to look out for.
Okay, well, watch out for that and watch out for your list as well, as and when it keeps developing, because that's a developing story that we're all watching out for. But KFin Technology is up 8% on account of that Jeffries note. Bharti Hexacom has actually managed to perk up quite nicely. You have Godrej Industries up 5% and a lot of other stocks actually. But looking at the list of stocks which are sitting at all-time high levels, Radico Khaitan is in that list, 4% higher. United Spirits has been doing quite well for the last couple of days. Sunil, what's your sense on Alcobev industry? Because Alcobev and BPC both, because they both have these cycles that suddenly stocks like, Honasa, Nykaa and United Spirits, Radico, etc. perk up, and then there are days when they do nothing. As a medium-term strategy, would you buy any of these names?
Well, I'll still not say stock specific because I'm an independent director with an AMC. So I can't talk stock specific, so I can only speak sectors. So from a sector call, I think that, yes, these are definitely good. It's a part of a good sector because high-end retail is where these come in. And I think that's a big growing story. I can't talk specific stocks, but yes, overall in the sector, I'm quite positive.
You can't talk specific stocks, but we are hoping Naresh will help us with that. Naresh, Honasa, Nykaa, Radico, USL. Tell me the top 2 recommendations from these 4.
So it would be United Spirits because that's the one which has underperformed and is getting closer to new all-time highs. So that's one. And Nykaa could be a bet which could surprise, given that the stock has gone nowhere compared to what has happened in the whole new age space. And in the last 2-3 sessions, we've started seeing volumes over there. So I would go with Nykaa out here at 173, have a positive bias here, would keep a stop loss below 160 and expect, give it some time to actually make a move.
Let's talk about the IT sector because looks like and everyone's betting on the fact that the tide will turn for the IT sector for the better, hopefully. I don't know if Anisha will concur with that view or no, sitting right next to me. But also one critical point at one point in time, I don't know if that sort of a correlation has changed or still relates, is the fact that every time the rupee weakens, you have the exporter names, export-oriented companies seeing an uptake like the IT space. That play also still persists for all of them. The fact that you have rupee weakening, it will be in turn positive for these IT players. Yeah, that's for you, Sunil.
Yeah, definitely. Definitely, the weakening of the rupee is a big positive because all of these are listed in India. So rupee EPS definitely will get favorably impacted by rupee depreciation, right? In fact, IT is one of the best way to do global diversification for Indian investors, right? Because your dollar strengthening and rupee weakening automatically gets plays out in those shares. So definitely that's a good story. But I think IT is not just about depreciation. It's about the revival of the US economy. It's about the revival of the BFSI space in the US, which is one of the biggest buyers of Indian IT products. It's also about the growing AI revolution, where I think that Indian IT companies will start playing their part in that, right? Because they are quite smart and they are quite interconnected with their buyers. The other reason for buying IT for me is the fact that FIIs get a great deal of comfort from IT because that's one industry where they can get both sides. See, all the buyers will be their, contacts there. Right? For any FII, US-based FII, he will know those companies. So he can validate it, he can look at the growth projections, and he can take a call on it. So for all of these reasons, IT remains the favorite pick for me for the coming year.
Okay, so that's one of the recommendations for the coming year. But looking at the year gone by, and if I'm looking at the stocks which have given you the maximum return, lo and behold, you have BSE, which is up 150% this year, and it's been marked by a lot of topsy-turvy rides, but BSE has done well. CDSL is up 113% this year. CAMS continues to do quite well, 93% gain this year itself. Sunil, begs the question that this entire financialization of savings theme, the entire exchanges as well as the securities and the ancillaries, AMC, etc., do you think this is something which will continue as a theme into next year as well? And are they still a buy after these inflated returns?
No. They are still a buy. In fact, they're not just going to continue, they're probably going to expand. Because you remember one thing, you're talking about the SIP book going from 16,000 to 25,000 crores. Now, every SIP, CAMS makes money off it. They charge fees for it, right? A lot of the significant proportion of SIPs are routed to the Bombay Stock Exchange portals and NSE's portal. So, if you see, and these financialization of savings that you're talking, it's a big shift from bank today. You're seeing that mutual fund AUM is now more than 30% of bank, of more than one third. So this shift of money from the banking system into the financial system, right? The listed financial system, whether it's mutual funds, it is PMS, AIF, it's insurance, health insurance, life insurance. All of those are I see as the big growth stories for India because of the demographic change also happening. So I think that these are places where I don't think that even at these valuations, they're fully priced in the kind of growth outlook. I see the SIP book going from 25,000 to 50,000 in a few years and all of that. So for me, this is a big play because it's a play not only on the demography, it's a play on the per capita GDP increasing, it's a play on the financial literacy and awareness increasing. I think it's a conclude. It's a whatever, all the three are coming together like a Triveni Sangam. And so I think that these are growth businesses in which we must remain invested for the medium term.
All right, so that's the view coming in from Sunil when you talk about these market-related counters. But before we move further, Kunal, let me quickly get your BTST ideas.
So, one sell call and one buy call. The sell is on Tata Motors. So, this stock remains to be one of the heavyweight auto names which is still under weakness, showing signs of weakness. So, would be looking out for targets in the range of 740 for the next couple of days, and stoppers could be kept at 772. Wipro is the other stock which looks very attractive. The stock is confirming a breakout as well as a close above 312 mark. So, targets of 325, stoppers could be kept at 305.
And Naresh, what about you? What are your BTST ideas?
So first would be a buy on Reliance Industries holding on well, stop loss at 1240, target price of 1290. Second would be a sell on Tata Steel. The momentum continues to be down, stop loss at 146, target price of 138.
Okay, so there was Tata, which Tata stock did you pick?
Motors.
Tata Motors, and he also picked one of the Tata stocks. So let me actually talk about Tata Chemicals because we did speak with the management earlier in the day. They did talk about how the problems with respect to soda ash pricing is expected to continue. It's not a problem that will go away in a hurry, but they do maintain that perhaps the pricing as well as margin is something that will keep improving as we head into the next year. They're working a lot in terms of bringing the cost efficiencies. They also talked about how government is trying to support the domestic industry at this point of time, but clearly that's one stock that we're watching out for. But talking about domestic protection, Sunil, steel is an industry is one which has been looking out for that protection from the government for a long time, even though when you have the users, whether it's the car companies, etc., which are against that protection. What do you think is likely to be the case for metal stocks come 2025?
Yeah, I think metals, China is the place to watch out for because prices of metal products in India are still linked to the London Metal Exchange. And that's where China plays a big part. I don't see yet a big Chinese recovery. If the tariffs and all of that are going to be heavy, it's going to get much delayed. And like I said, China needs to diversify it outside. So I would say I'm a bit bearish on the metals pack in the current context, right? I will only turn around when I see a strong US manufacturing recovery happening, which in turn could fuel metals related down, whether it's copper, aluminum, steel, ferrous, non-ferrous, both. So for me, that trigger is there. It's the weak Chinese economy means that I believe that metals are in for a slightly bearish trend. So in that context, the question that you asked me about tariffs and all of those, well, it all depends, right? If the metal prices are dropping and they're trying to dump on India, then naturally India will have to counter that. But bear in mind that Trump is also going to look actively at what kind of tariffs you're putting on those stuff. So it's going to be a complex thing, whether the government responds to that. Because the government capex also slowed down and that also hurt the steel companies in terms of demand. But in the second half with government capex, I expect it to pick up. Then I think the demand for steel from the government capex spin-off will start. Private sector capex is yet to start in a big way. But when that does start, steel demand will pick up. So I think it's a temporary issue for the domestic steel and metals industry, but we have to wait for these triggers at government capex and this. And if international prices keep trending down, the user industries will be happy about it, but not the steel manufacturers.
Sorry to interject, but just wanted to take a look at a couple of these charts which are perking up. Naresh, what's the view on Craftsman Automation, a sudden sharp spike in an otherwise sort of a weak market. That stock is up 7% right now, and Techno Electric is the other one, and both of them have decent amount of volumes at play in the last few minutes. Anything on the charts that you are picking up?
So not really, because both are generally pretty illiquid, although they have pretty high institutional ownership. Techno Electric is relatively a better chart, wherein the stock has been consolidating in a sideways zone of 1400 to 1800, but no view on the Craftsman name as such.
Craftsman Automation chart yet again, because it was showing a rise. Oh yeah, it's now showing a rise of 14%. I think we picked up the wrong chart earlier. The other one, of course, which is doing quite well is Bharti Hexacom. That one is up 6%. Godrej Industries, IGL, Action Construction, Aurobindo Pharma, whole host of names doing well in the trading session, and ditto is the case with Supreme Industries as well. In fact, Supreme Industries is something that we discussed with Chakri Lokpriya earlier, and he talked about how that company is also poised for good growth going forward. I'm not sure if we do have that soundbite that we can play. Okay, we'll try and kind of get that as well. But in the meantime, overall the market setup has improved marginally. We are above the mark of 24,200. Okay, so Supreme Industries is something that Chakri Lokpriya was talking about. Let's hear out his view.
The company is actually very well diversified across the various PVC, polyurethane, all those kinds of markets, and it has a fairly strong market share across various segments. One of the company's strengths is, it's is able to manage its inventory quite well because of the PVC and the various fluctuation in the raw prices, which are all oil linked. And the last 1 year has been very, very volatile, as we know, for the oil industry and its derivative products. And therefore, all these companies have suffered huge amounts of inventory hits and margin hits as a result, because they're unable to price their product well. So as this whole world of oil stabilizes and the downstream kind of stabilizes, I think Supreme Industry is a market leader, very well placed to do well.
Sunil, I wanted to ask you about the hospitality sector. December, or rather, the Q3 turns out to be much better for most of these companies, given the fact that you have a lot of weddings that is happening you have exhibitions, you have conferences. Apart from that, you also have now a lot of global bands coming to perform in various parts of the country. So that also will add to the gains coming in for the hospitality sector. But where do you see this one headed now, given the fact that year after year, the base is just getting higher?
Well, before I answer that question, why did you forget Diljit? Why you don't need to talk about global brands? Yeah, Diljit is carrying out a very successful tour in India.
You got the tickets. Oh, they are playing tomorrow. He's going to perform tomorrow in Mumbai.
But isn't he a global citizen in that case, Sunil? He is a bit of a global citizen, right? Not just the Indian one.
You can call him that, but I would still say he's the Indian brand. Made in India.
Let's agree on that.
Yes.
Okay. No, I think I'm very, very bullish on the hospitality, and the reason for that is 2-3 things. One is, as I said, per capita income, the lifestyle changes. People are traveling a lot more. Even, you have these concepts of people going off to a hotel for the weekend, just in the same city, but they just take for the weekend and go to a 5-star hotel and spend time there. So the attitude, the youth of India with the rising per capita income, their lifestyle habits are changing, and hospitality is a big, big part of it. And, you look at it, even medical tourism, Ayurvedic retreats, right? So many of the people are going into these retreats to chill out and, de-stress, so kind of a thing. So I think this is a huge growing space here. And I think it's a cyclical space, because in hospitality, you got to invest in the real estate, the property, the people, and all of those costs. But once they do that, it's a question of capacity utilization going up, and it's straight to the bottom line. So I would say that if you look at it, those who have expanded capacity in the hospitality sector, right, their current profitability could look depressed. But as the capacity utilization starts getting used up, because they just invested in capex, I see a huge V-shaped curve happening in their EPS growth. So I think picking good quality hospitality plays is a very good medium-term bet that we can make.
Right, Kunal, any names that you can give from the hospitality space that will look good even going ahead?
So I think other than Indian hotels, Lemon Tree is something which is coming back into a breakout mode. So I think it's the 4th or the 5th consecutive week where you've seen the stock coming back into a very strong recovery. I remember tracking this closer to 120, 110, 120 range. From there, the stock has moved to that 150 plus mark, very close. I think it's already confirmed a breakout of its life highs of 150 plus levels. So that's another name to look out for. And my sense is that this sector would be one of the few sectors which over the maybe next couple of years would probably keep on giving you those compounding kind of returns on a consistent basis. So whether you want to go back to the leaders like Indian Hotels and try and take advantage whenever the stock gets back into a 5-10% correction, those are classical re-entry points or accumulation points for the stock, or whether you look out for fresh names like Lemon Tree, Chalet Hotels, etc., which also look attractive.
Okay, so that's the take coming in on the hospitality sector. Apart from Indian hotels, there are other stocks to watch out for as well. But what we are watching out for tomorrow are the cues coming in. Of course, overnight, the biggest cue is going to be the Fed meeting, and the 25 basis point rate cut is pretty much expected. But we are watching out for the projections for next year. Tomorrow is going to be the weekly options expiry for Nifty as well. So expect some volatility on account of that. We're also expecting some more data to come in as far as US is concerned, whether it's jobless claims, and then the central bank decision coming in from Bank of England as well. So lots of macro points to really watch out for, and that's the reason perhaps the market was very worried today, and the worrisome Wednesday really playing out. But for the
If you like this video, then like, share and subscribe to ET Now.